The following is a presentation of TFNN, live at TFNN, the Money Masters. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 9th, terrific Thursday edition of today's Money Masters show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better Money Master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and I, we must master each and every day. So let's begin our day with some empowering beliefs. You know, folks, you are only as strong as your weakest link. You know that. Of course, that begs the question, how do you form a strong link, chain, fence? The answers this morning, they're brought to us by our man, Alberto. Al, the producer in the seat, making everything happen for each of us here at TFNN each day. And he shared this morning with me some really great words of wisdom, so I thought I would share them with you. It goes like this. Write these down. Just, 4 beautiful sentences out here, folks. You really should write these down. I know I have. Watch your thoughts, for they become words. That's pretty good. Watch your thoughts, for they become words. Then, watch your words, for they become actions. Yeah, let me repeat that. Watch your words, for they become actions. And thirdly, watch your actions, for they become habits. Boy, nothing could be truer than that. Watch your actions, for they become habits. And finally, watch your habits, for they become your character. Took a lot of character to write that. Thank you for sharing that with each of us here at TFNN. That is from Al, our producer out there. He's making sure that everything goes smoothly for each of us here at TFNN. And then, and I don't have the last one here. So good news that we've got communication going back and forth, because the 5th one here is watch your character, for it becomes your destiny. Gotta love having somebody in the seat here, making sure that each of us stay on track. So watch your thoughts, for they become words. Watch your words, for they become actions. Watch your actions, for they become habits. Watch your habits, for they become your character. And watch your character, for it becomes your destiny. Let's go see if we can check out the character and the destiny for these markets here. Right now, we've got the Dow trading off about 5 points. S&P is up 2. NASDAQ Composite up 3 points, trade out at 41.69. Russell 2000 up 2 points. NASDAQ 100 flat out here. The New York Stock Exchange up 4 points. We had gold up $1.20, silver down a penny, light sweet crude up 15 cents out here. Our call-in number is 877-927-6648. Let's go check out these markets. Let's start out by taking a look at the indexes here. Let's start off by taking a look at the Dow. What do we know about the Dow? Well, we know the Dow has completed a couple different patterns out here, and one of those is that measured move of that consolidation break, that 1,000-point consolidation break. It did that, completed that pattern on, how about that, right there on New Year's Eve, as price got up to a high of 16,588. You know, we had been calling for about the 16,5 to 16,6 level, so that's a beautiful thing. Little bearish engulfing, bear sash style candle on January 2nd out there. So that says that is a very important top on December 31st out there. A close above, not a test of it, but a close above that level, December 31st, 16,588.25. Well, that all of a sudden would become new support versus the resistance that it is here right now. What has the Dow been doing? If you caught the last hour of the show, we actually now were able to certainly conclude, based on the intraday chart, that the Dow, we were looking at the Dow futures, been traveling sideways. I believe about a 170-point move, I believe, is where it is traveling. If we take a look here at the Dow, let's just take a look at the Dow index, you would say the low of 16,405. So 16,405 being the bottom of the consolidation of the cash index, up to 16,588. That would be, 405, 588. That's so about 180 points right there. So the 170, 180 points is the consolidation move. Why is that important? Because the likely next move, break of that consolidation area, is going to be equivalent to, greater than, or equal to that consolidation pattern out here. Thus far, though, since the highs, really been traveling in that sideways move out here. I suppose the likely outcome now because Jobs Fridays usually have a significant directional change in the marketplace. Talk about directional changes. Today happens to be a 2 planetary index day, a 2P index day. Our man Larry Pesavento, he'll be with us because it is thankful, thoughtful, terrific Thursday. He'll be with us at about 12 noon today. I meant to go pull all of the other previous 2P index dates, the original work that Larry did. I'll see if I can do that during one of the commercial breaks out there, and then we'll see if we can apply that to the chart, either the S&P or the Dow out there. I meant to do it. I knew there was something. That's why I started off the 9 o'clock show saying, write things down on paper, and that one was in my head. I meant to do it and just simply forgot all about it. But today is a 2 planetary index day. Perhaps today ends up being the high inside the market. Maybe it's a low. I don't know. But what's nice about being able to take those P index days is we can apply those to a chart, and we can go find out whether or not, probability-wise, whether or not they have any type of significant change in trend in a marketplace out there. So if I can't do it today, I certainly can do it tomorrow, and I'll just remember to write it down on a pad of paper here in the not-too-distant future. Now let's take a look at the S&P 500. Let's go see what it is doing here right now. S&P 500 today, having made the 0.786 retracement, has got up to the 1843 area, actual high 1843.23. The exact 0.786 retracement would be 1843.94. So if that is the high, that still could be the A to B equals CD down pattern in the market, of course. Momentum-wise, I can tell you the trend is still to the upside. There's not a question about it. The trend is still the upside. There are some daily signals out here that suggest that, there is maybe a short-term top that is in. We'll be paying attention most certainly to the S&P 500. It has tested, I believe it's also tested. Yeah, it's tested the swing point low from December 31st, so that's an important area. We'll take a look at today's volumes out here. The low of that swing point happens to be 1842.41, so you've been above that. You've made the 0.786. If this, in essence, is the high, then we're looking at a price projection of about 1817.52. That would be your 1-to-1 A to B equals CD down. Of course, it would depend on how you come off of that move, and with Jobs Friday being tomorrow, if it's a significant move to the downside, that would suggest pricing between the 1810 to 1801 level, your 1 to 1.272 or your 1 to 1.618, A to B equals CD down. So that's on the S&P 500. So we know the Dow here. And what the Dow did was the Dow actually, I didn't bring this up. I should have brought this up. The Dow came into the swing point and tested the swing point from December 31st, and it closed inside there. And that's always, when you close inside a swing point, normally you'll go test that, even if it's on light volume. In this case here, it was a drop. It was similar volume inside of the Dow Diamonds, so similar volume, but so far it's trading below that swing point, which is 16,446. So we know inside the Dow, we're dealing with about 180 point or greater, right? Your measured move is equal to your consolidation, to the upside or the downside. Inside the S&P 500, we know now we've tested the December 31st swing point low, so that's a test. If it closes below that on lighter volume today, that is considered to be a failure on price and volume. Let's go see what the Russell 2000 has done out here. The Russell 2000 has made its 0.786 retracement. 1163.39 was the exact 0.786 retracement. What I'm referring to is it's not December 31st high, but the high that came in on December 26th, the day after Christmas, 1167.96. And then from that point forward, it must be coal that the Russell 2000 received as Christmas gifts out here, because it decided to move lower, in essence, right away. Made a low. Now, that low that it made, it came back and it tested a strong support level, and that was the gap up, the wide-ranging bar that took place on December 20th. Then you had a little gap up on December 23rd. So far, the Russell 2000, although weak, has not been able to bust it out to the downside. It has now formed, though, the 0.786 retracement, and it has tested the December 31st swing point. The low of that is 1161.41. You're trading at 1158 right now. Should this be the A to B equals CD down pattern inside of the Russell 2000, you'd be looking for a move down to about 1142. Of course, if it comes off the C point in any kind of explosive nature, you'd be looking more like about 1136 to 1129 out there. If we take a look at retracements from the significant swing point low of December 11th all the way up to the high on December 26th, you'll see that it sets up a nice 0.618 Gartley buy pattern right around 1125. 1129 area. So that's inside the Russell 2000. Let's go check out the NDX 100. Let's go see what it has done out here. The NDX 100 today getting up to its 0.786 and a test of the December 31st swing point low. That level, 35, 75, 25. It got up to a intra-session high. Now, yesterday it also happened to test that area. So you got another test today. You'd have a bearish engulfing candle today with a close below 35, 58, 30. That A to B equals CD down, that it too could be forming out here. That pattern would take it to the 1-to-1, would take it to a price projection of 34.99.85. Again, if it comes off with any kind of conviction, what it says is 34.78 to 34.50. If we take a look at where it would form its next Gartley buy pattern, and this would be a nice actual setup for next Friday. We might have the full moon coming in. That would say 34.78-ish would be the range. 34.87 would be your 1-to-1. A to B equals CD. Well, it should be your 0.618 Gartley buy pattern. But we're just going to have to take things one moment at a time, one day at a time out here. That's what's going on with those four indexes. Of course, we can't stop there. We must, and I do mean must, we must go take a look at the New York Stock Exchange. Let's go see what that index is doing here. Today's little bounce up, no big deal out here. It still has leaving those passengers stranded. So where we've had, just to kind of put things in perspective out here, we've taken a look at the S&P, we've taken a look at the Russell, we've taken a look at the NDX. Each of those have tested the December 31st swing point low. We know the Dow has gotten inside it, so the Dow is just simply in a consolidating pattern. The New York Stock Exchange did not get up there and test it. In fact, the New York Stock Exchange has not even tested the high of the downdraft session from January 2nd out there. That's at 10,352.71. So far, the intra-session high has been 10,344. So this island is still completely intact out here. That's where, because it is the wider swath of the market, because it is such a significant bearish reversal signal, it's the reason why I am, because we've got these declining tops out here inside of the price oscillator, inside of the New York Stock Exchange. It is one of the reasons why I'm expecting a short-term top and a move down, an A to B equals CD down. When that pattern is going to begin and take place, well, today, right now, is a pretty good time period for that to potentially take place because of now the tests of that December 31st swing point low. Of course, any of those indexes close inside there, and that says, well, looks like the market may just want to be consolidating because what should occur would be a move up to test that high out there. If we take a look here at the VIX index, let's go check in and see what the VIX index is doing. It's up about 0.8% here, up about 11 pennies this morning. Still below that 50-day exponential moving average, so the VIX here is not exactly sounding the warning shot, firing the warning shot, or sounding the warning horn. Warning horn? Boy, that is not two good words to put together there. 877-927-6648. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with TAS Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to TAS Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow is off 14. S&P is flat. NASDAQ is down 3 points. Russell is up 10 cents right now. NASDAQ 100 off 5 points. We've got gold off. Gold is flat. It's even. Even Steven. Straight out at 12.25. Silver is down. Nickel. Light sweet crude is up 16 cents. Natural gas. Let's go check out natural gas out here. Let's check out all the commodities. Not all, but let's check out the 4 primary commodities that we track out here, that I track for you. Start off by taking a look at Goldilocks. Let's go see what gold is doing out here. Gold actually behaving pretty good. Pretty good. When we take a look at retracement levels, that's when I say pretty good. So if we're taking a look at the daily chart here for Goldilocks, what we do know, and it just hasn't hit my screen here, we know that gold has broken a short-term descending trend line out here. It broke through that, did that on January 3rd out there. A little doji candle up here at the January 6th level. That becomes a resistance area, so we want to be paying attention to that. And what we have seen, though, is the retracement here has only been the 0.382 retracement. So what is that setting up right now, potentially? And what that is setting up potentially, well, this is where I'd have to really draw the formation, because it doesn't happen that often where you use the same session as both your swing point high and swing point low. But in essence, with gold, that's what you have to do. Now, I'm going to pull it off to the side just simply because it's a little bit more visual and easier to see. But I'm benchmarking the low. The C point of the A to B equals CD up is also the low of January 6th. So I'm using the high, which is at 1247.70, and the low, which is 1212.60. And in the art of forming the A to B equals CD, you're allowed to do that, folks. And you're especially allowed to do that when you're the host of the show. But really, in all seriousness, you really are allowed to do it. It doesn't happen too often. And the reason why you have to use that is because the low that was formed here on the trading session of January 8th was a higher low out there inside of the market. So your 1-to-1 A to B equals CD would take you up to 1279, and that would bust through the descending price channel out here, which gold has only done for just a few trading sessions back in a year ago, February of 2013 out here. So that's what we should be watch to see if, in fact, that pattern unfolds. That's going to require getting above 1247.70 out there. And then I would say, to me, that would say 1297 is more likely the target. If we take a look at retracement levels here, once you break through that rising price or the descending price channel, that would form your Gartley sell pattern right around the 1292, 1297 area. So I suspect that's where gold would want to go ahead and trade up to. So that's what's happening right now with Goldilocks. In the case of silver here, back in nickel right now, trading out at 1948. We look at the daily chart of silver. This had been acting stronger. Now it's a little bit weaker. It's a little concerning because it's come back into the descending price channel out here. But if we take a look at retracements, that's all that we can do at this stage. Go from the retracement low of December 31st to the high that took place on January 2nd. It's made the 0.618 retracement, which is 1937. So if silver can start to get some little giddy up and go, that's an if at this stage here. The 1-to-1 A to B equals CD, that's what should be the expected outcome, $21.03 right now, trading out at 1948 out here. Volume yesterday, 38,000 contracts coming back into 44,000 contracts, and from January the 2nd out there. Let's go take a look at light sweet crude. Light sweet crude here contending with trying to break through the B point of a potential A to B equals CD down. That would be the low from November 27th out at 91.77. Has not done that yet. 160,000 contracts on that trading session you came into yesterday with volume 177. That says that low at a minimum should be tested, and that's 91.77. A close below that says 88.14, more likely. I'd have to say 84.71 would more likely be the target on that. And that's really what it's pointing to. It's got a lot more power coming off that C point to the downside, and that is on light sweet crude. If we take a look at natural gas out here, natural gas, yesterday I was pointing out the continuation patterns. Most candlesticks are reversal signals. Well, here, let me restate that. The candlesticks that you should use, because not all candlesticks are reversal signals. Most, meaning the ones that you should use, are reversal signals, either bullish or bearish. There are a couple of continuation patterns. You need to understand how to play the doji candlestick, especially to the upside, because to the downside, the dojis don't have as much meaning, in my opinion, because, fear is a greater emotion than greed is. That being said, what we did take a look at yesterday was the continuation pattern, the falling three or the rising three. In this case here, we gave you the falling three pattern because of this wide-ranging bar right here on the trading session of December 31st. And what we saw take place yesterday, remember, we had three of these four small-bodied candles with inside that, and yesterday it broke through it. That's the continuation pattern to the downside. Natural gas pulling back probably to 405, maybe 395, 389 out there. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With market insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow's off 23. S&P is flat. NASDAQ is down 5 points out here. New York Stock Exchange off a couple of points. Numbers we're going to be paying attention to today. Inside of the New York Stock Exchange, net declining issues. You get to 836 or more. The bears will have officially taken control of the New York Stock Exchange. That's after the island top reversal pattern that is in place out there. Let's take a look at some stocks here that are popping and dropping. If you didn't catch the first hour, we got ICPT is the ticker symbol. They seem to have a drug that is truly aiding with kidney cancer. I suppose that has an impact on diabetes as well. So that would be a beautiful thing. Where's my show up here? This thing was up 260% or so today with some big volume in this. Now, this was an IPO, folks. Goes back just about October of 2012. So what has that been? Less than 6 months? That debuted around 1874 and trading out right now at $262. So that one there could be a actual game changer. That gap may not necessarily have to be filled. And it's a big gap, folks. You're talking going from $73, $71 up to right now the low of that session, which was $231 out here. So that is I would say that would be a change in the company out there, and that is on ICPT as the ticker symbol. We've got the Acuity Brands, AYI is its ticker symbol. That is up 16% this morning. Let's take a look at the AYI. And this is up with a big volume as well. Let's go see what this is trading into. Let me see if I can find any news behind why this is up so much. Looks like they're out with numbers. They generated revenues for their first quarter, $574 million versus $481. Net income was $44 million versus $26, so they doubled the net income. This looks pretty good here. It looks like everybody in this equity here is at the party. Let me put this on a longer-term time frame here. Let me put it on a monthly chart. Yeah. So nearly everybody in this equity here is in a profit position out here. As far as where this thing might head to, anybody's guess out here. You start to get stocks like this, and your traditional tools aren't going to help you a whole lot, in my opinion, in taking a look at A to B equals CD patterns and other things along those lines. It's just not really going to aid you. So, but that is Acuity Brands Inc. out here. Go back to a daily chart. Daily charts might be able to help a bit. If this thing ever did, I don't know what they do. I guess I could find out. Shouldn't I find out and tell you? They produce and distribute lighting solutions, components, and services for commercial. How about that? A lighting company that is gapping up like this. In any event, if this thing ever does fall out of bed, where it will fall to, it could eventually fall back to January 8th. Of 2013, so that would be about a year ago. How about that? Exactly a year ago, had 2.5 million shares to the downside. So they didn't exactly have good news back then, but that turned out to be a high volume low out there that never got tested. That is on Acuity Brands. Excuse me. Let's take a look here at eHealth Inc. Getting a little something in my throat out here. That's not good. EHTH. I guess a little frog in the throat. Never hurt anyone, unless you're doing live radio. In this case here, EHTH is a ticker symbol. They're up with some nice volume here today. Nice little breakout. This thing is, let me pull this thing up back. Looks like everybody in the party, everyone that's an owner of this is also in, nice looking stock chart out here. Almost everybody in this is in a profit position, other than a few people maybe from earlier today out here. Yeah, that's about it. So everybody having a good time with this equity, ticker symbol EHTH. Another nice breakout here this morning with some good volume, 424,000 shares behind the move thus far. A couple things to the downside that are not doing too well. Bed Bath & Beyond, down with volume. It's trying to take out a swing point. The most recent swing point it's looking at is December the 4th. 794,000 shares there. It's done 1.1 million shares today. If it can break through that low, which was 74.72, you're just slightly above it right now. It says it should come back all the way back to August 30th. Right around the 66.07, 67.45 level. You do have some volume off of the top, and that is on Bed Bath & Beyond. We've got Medbox, MDBX is the ticker symbol. I don't see any necessarily any news behind the move here. MDBX. What does Medbox do? You'd think they would be in the box business or the medical business, right? Let's see. Medbox develops, sells, and services automated, biometrically controlled dispensing and storage systems for medicine and merchandise application. So that's what they do out here. And this thing here, this is an interesting looking stock chart. Virtually no liquidity inside this stock chart whatsoever until the last couple of days. It started to get a little. When I say no liquidity, this thing on a good day was selling 30,000 shares at about $10. So, but something began moving this equity out here. Pot vending machines, is that really what they do? Is that truly what they do, guys? Somebody in the den? Is that really what they do? Yep. How about that? Okay. Well, that's interesting. That's really, they can't do that. They cannot do that. I'm not buying that. Sorry. I'm gullible. I'm just not that gullible. In any event, right here, December 30th, this thing started to, really, David White said Son of a gun. How about that? Well, anyway, this thing here, let's go take a look at the stock chart out here. This thing here started to take off on December 30th, 91,000 shares. I don't have enough time to investigate it, but this thing really took off to the moon because it went from, let's say, $10 all the way. It made a intra-session high of what? 93.50? Good Lord out there, and I've left out one of the words. So talk about a move in a period of 4 or 5 days. That's the old Eiffel Tower, isn't it? How about that? So this thing now is pulling back. So you had big volume on that trading session of January 8th. I guess people would be taking some profits. Maybe where could this thing pull back to? I don't know if it'll pull back all the way to the breakout area at 1484, but if it does, it's going to have a high volume weekly bar, that's for sure, on this thing, because all the volume really taking place this week. Man, take a look at the volume in this. I don't know how to tell you how to trade this thing. Be careful. That's what I would say if you were going to trade Med Box, a pot machine out there. That's too funny. In any event here, let's continue on. Let's take a look at some of these other stocks. Google is down a bit this morning. Let's go take a look at the core, a group of core stocks that I like to follow. Let's go see how they're doing this morning. We've got Google. This is the monthly chart. Let's change this to a daily chart, see what we have going on inside here, see what it has done. So Google, it's off of its session highs, but still made a new all-time high again this morning out at 1144. Nothing bearish yet about that candle formation inside of Google. Let's take Priceline as a different story. Priceline here has been struggling, may have made a significant high out here. It's got a, speaking of highs, right? It has been traveling in a sideways consolidation box. Priceline, if we're nice enough to go ahead and get back up and test the highs once more, maybe about 1198, might make for a nice little potential short in this equity here. I believe when I was taking a look at my trend-based system out here, let me put that up on the screen. Let's go take a look at it. Let's put up, as soon as I can find here, PCLN is the ticker symbol. I want to see. I believe that the change in trend took place on this thing on the daily chart. Now, what I don't know is whether or not it began. So it's only taking place here on the daily chart. Let me blow this up a bit on my screen out here. Found support at the 55-day exponential moving average. That's that little black line going across my screen. So that was on the trading session of January 7th. So, yeah, it would look like to me that on the weekly chart you can see here we're in the cautionary zone. That's the yellow zone out here. It needs to get below 1120, a close below 1124. 22 on a weekly basis would be the first sign of a real crack in the ice inside of Priceline out there. And then I would put that, I would say that's 1124. That would also take you below that 55-day exponential moving average out there inside the market, which Priceline has not been below that level since last time was below there was back in April of 2013 out there. So I think paying attention to that would be good. You got Regeneron Pharmaceuticals, REGN is the ticker. So, well, I said let's take a look. We'll come back and take a look at that perhaps. Let's take a look at some of these other core stocks. Let's look at IBM. Let's go see what IBM is doing. You got the Dow is off 38 points right now. Of course, we know the Dow is in a sideways consolidation box as we speak right now. IBM here, what's going to be, it's really had 2 inside days, the last 2 days, so not releasing a whole lot of information. What we do know about IBM is it got back inside its range, its consolidation range, its 30-point consolidation range, and it couldn't bust it down. Says that it could try now to run all the way back up to the $210 area. Looks like it formed a little Gartley sell pattern out here. That would be the one coming off of the trading session from September 19th. Let's see if that's, in fact, what it did out here. Yeah, 0.786 Gartley sell pattern. Boy, take a look at Fibonacci numbers coming together. Doesn't get too much better than this. You got a 0.618 retracement. That formed your B point of the A to B equals CD on the way up. And that is inside IBM. Your A point on this was the low, the high volume low of October 17th, 172.57. Your B point out here was that little doji on November 20th. Backs off, makes a 100% move, comes back and test that low with light volume. 4 million shares versus 22 million shares, so it couldn't bust it out. Nice big bullish engulfing bull sash candle. It took place on December 16th. Now it's made the 0.786 retracement. Kind of a wideish ranging bar out here. That's actually bullish and positive for IBM. But it is nonetheless a Gartley sell pattern, which has not been confirmed. A nice 1.272 expansion of your B to C swing points out here. You'd get a confirmation of a bearish signal here with a close below yesterday's open, 186.39. That would be the number to be paying attention to inside of IBM. Of course, that would be a Gartley sell. If you caught the first hour, there's always 5 outcomes of any Gartley pattern. The very first one is going to be your 0.382 retracement. That would be 183.56. Your second is the 0.618 retracement. That's at the 179 mark. Your third outcome would be 176.37. That's your 0.786. And then your fourth would be the 100% move of a move. That would be coming back and testing that high volume low one more time. If it breaks that would set up a new A to B equals C, D down. That is inside of IBM. Let's take a look at the J.P. Morgan. Let's see what J.P. Morgan is doing out here. Again, today, having a sideways move. J.P. Morgan has a confirmed, let's see if it's confirmed, 18 million shares, and it did 13. No. I don't see. Let me come back here and look. It's easier to do this. Does it have a confirmed A to B equals CD? No, it does not have a confirmed A to B equals CD up, although I'd like to go ahead and make that move, which would take it about 62.27 out here. Still no bearish reversal signal today. If you get a close below yesterday's open, 58.54, you get a nice little bearish engulfing candle out there. I'm going to go back and in a moment here, I want to take a look at the futures because it shows the consolidation and a couple other patterns that we had in play out here. Let me just take a quick scan of these charts, see if I see anything off the top of my head that we need to pay attention to. I don't see anything as of yet. So now let's go back and take a look at the 30-minute futures charts. I believe that's what we were looking at before that. All the beautiful patterns that we need to be paying attention to today out here in the market. The first here was the NASDAQ futures. Now we can see the NASDAQ has broken that little rising price channel, broke through the hammer candle low. That was at 4 a.m. this morning. So now we're seeing that 0.786 Gartley sell pattern come to fruition, whereas the first move down inside this move here, well, it's already taken you down there, the 0.382 retracement level, 35.49. Coming in here, let's see, we had volume on the first 30 minutes at 10:30 of about 25,000 contracts so far. We've done 16,000 contracts with 13 minutes to go out there. So it's made that first move of the Gartley sell pattern out here. Let's take a look at the Dow. Okay, the Dow. Okay, so the Dow now coming all the way back. So this is important. So here, this is good. This is good. This is great because this is important because we now have the Dow coming back into that consolidation low out here. We know this has been an important low. This low is at a price level of about 16,348 out there, and right now you're trading at 16,336. So it's under attack. And why is that important? Because if in fact we see a break and a close below this level, that sets up about another 170 points to the downside out here. So the Dow, which has been the strongest, and what it has been the strongest, and the reason I say it's been the strongest here recently is because it actually got up. The Dow did. The futures did not do it. But the Dow was able to get up and test the December 31st swing point out here. So we're going to be paying attention to this at least for the next 12 minutes, and then Basil will go ahead and he'll take the baton and we'll take a look at it from there. But right now you've got the Dow futures up against a significant support level. We'll see if they are going to continue to hold there. We'll see if Janet Yellen has the plunge protection team watching that area. I know she listens to the show every day, so they now have their signal. They know where to come in and find a support level. Inside of the S&P 500, it has formed a Gartley sell pattern, a 0.786 Gartley sell pattern. If we take a look at the first outcome of that Gartley sell pattern, it would have said the 0.382 retracement. Well, it hit that. It's trading below that, the 0.618 retracement, 1825. That is the number where it should at least move to. Of course, he's got some wide-ranging bars now to the downside. It hit the 0.786 Gartley sell pattern with a wide-ranging bar out here. So we'll see if those bulls are around. And it's got a hammer candle as well that is under attack as we speak. That low of that hammer candle is 1828.75. You're trading at 1828, even Steven right now. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter,
Patterns, Profits, and Peace of Mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 57 points right now. S&P is down 4. And, I've got the... I didn't get a chance to take a look at those 2 P index dates for you, so I'll remember. I promise after the show is over, I'll write it down on a piece of paper, and I'll go take a look at that during tomorrow's show out there. Today is a 2 planetary index date out here. But if we do take a look at P's, our P's and Q's, if I take a look at a nice tool that Ensign Software has. It's called Pesavento Patterns, and what it does, folks, even though it may be difficult to read, let me expand it up just a tad out here. It may be a little bit difficult to read all of the all of the numbers out here. What it does is it automatically identifies the expansions and contractions of swing points. And right now, the ES Mini, it's moving down. It's traded as low as 1826.25 right now. It's made a 1.272 expansion of a hammer candle. It's made a 0.618 retracement of the swing point low back down here on January 6th. We'll see if this area is going to hold a 0.786 retracement off of a swing point. So it should have some pretty decent support here. This also communicates important messages of the markets for us. So another element for us to be paying attention to. Again, if we just to summarize where it is that I believe that we're at in the market, I'm going to switch back to these charts over here. Key area for us is going to be the Dow. Right now, it's trying to break through a little consolidation zone. If it can't bust it down, which means a close below the 16,330 level, then it should do some type of retracement or maybe try to get all the way back to its highs. If it can bust it down, says we ought to see about another 130-point move to the downside. Doesn't necessarily mean that it happens today, but it does mean that you would be that would be the outcome. That would be the measured move out there inside of the Dow futures. Right now, as we speak, we're seeing it bust through here. It's a 30-minute chart, so we get another 4 minutes. So we'll see if that level, in fact, fails. But it's nice to have that at our back to know what's going on. We already know here that the NASDAQ futures have failed. So the NASDAQ, which was weak, went ahead and reared its head and became strong, created this little rising price channel. It broke through that, didn't have any problem breaking the ice there. So the what was strong to the upside and helped to move the market up is now showing that it has broken that strong pattern out there. I didn't really speak much today about the euro, Japanese yen. The reason I didn't speak much about it is because there's not much there to speak about. This thing has been traveling sideways as well in a version of a consolidation out here, and not really giving us a whole lot of clues in the marketplace there. The other area that we want to be paying attention to is the New York Stock Exchange. It's now off 31 points and has 588 net declining issues. Key number out here is going to be 836 or more. You get 836 or more net declining issues inside the New York Stock Exchange, along with these other patterns here that would be confirming, and then you'd have a confirmation, I think, of a short-term top that would take us into a low, probably into next Friday's full moon out there. But you got to take things one day at a time. And that's what exactly we are going to do. Let's see, what else is it that we should be paying attention to? Not a lot going on in the currency market, so nothing really there to focus on. At least at this stage here. So a pretty quiet market out there. Gold and silver are also quiet. Light sweet crude is quiet. The only thing that's not quiet is natural gas. If we flip back and take a look at natural gas out here right now, natural gas trading off about 6 pennies. It does have a continuation move. Yesterday's candle was a falling 3 is what the name of the candle is. It's a continuation pattern to the downside here. I would say that natural gas probably on its way back to about 389 or so. Folks, stay tuned. Basil Chapman is up next. Following Basil, we got our man Larry Pesavento, Daryl Martin, almost said Daryl White, Daryl Martin, David White, Andy Hecht, and the Tom O'Brien Show from 4 to 6. Have a great Thursday, folks. I look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.